Hi guys, I hope you all are doing good. This is Shubham and I welcome you to this video. I hope that your exam for RBI Grade B DPR 2022 went well. I think it was of between easy to moderate level, and I mean, let's see what will be the cutoff. I am expecting it to be somewhere between 50 to 55 marks, but let's see. So, the purpose of this video is to list out the questions which were asked in the exam, along with the options as well. And also, I will try to find out the answers as well, and also will try to give out the explanations for the answers given. So, because guys, you know that RBI does not release any previous year questions, and it becomes very difficult for the people, who will be appearing in future for the DPR exam to know the type of questions which can be asked in phase one. Yes, we have a list which has, which was made by previous year toppers, so that will give some idea. But if we have the options as well and the answers as well, so that will greatly help, I believe. So this is just a small effort from me, to help people who will be preparing for DPR. So just a disclaimer, guys, before we begin that so these all questions are all memory based. Okay, so there may be some mistakes in the questions. There may be mistakes in the options, and further, there may be mistakes in the answers as well. My answer may be incorrect. The explanation may be incomplete, so please feel free if you find any error, any error in explanation, if the explanation is incomplete, if the question is wrong, or if the options are wrong, or anything that you want to add, or if I miss any question. So feel free to suggest uh, among these lines in the comment section down below. I will be really happy to take all your suggestions. Okay, guys, so let us start. Okay, guys, so this is the first question that we have. So here they have given us the value of b, which is zero point 0.5, and then they have asked us to find out the value of Gini coefficient and whether this is a situation of perfect equality or perfect inequality. So here, now looking at this diagram, I hope you guys must be knowing this diagram. So this is just the, the horizontal axis represents the cumulative percentage of population, and the vertical axis represents the cumulative percentage of income, and this diagonal represents the condition of perfect equality. And then this curve, this slanted curve, so this is the Lorentz curve, and above it this is the area B, and the below area, so this is called B. Now, I generally do not remember the formula of Gini coefficient, because whenever I try to mug up something, I kind of make a mess of it. So what I try to do is I remember this formula. So this is very easy to remember. That Gini coefficient is A by A plus B. Okay. Now, now here we are given B as zero point 0.5. Now A plus B is also equal to 1 by 2. Why? If you look at the area A plus B, so this basically represents this lower triangle, this triangle. And the area of this triangle is what? Half into base into height. So half into base into height. Base is 1, height is 1. Why these are 1 1? Because if you look at this is 100%, and this is also 100%. What is 100%? 100% is 1. So half into 1, that is equal to half. Now we know A plus B is equal to 1 by 2. Let us put it in this Gini coefficient formula. So then you will get G equal to 2A. Now we are not given A, we are given B. So let us write A is equal to 1 by 2 minus B from this equation. Okay. So while when we put this in this formula of G is equal to 2A, so we'll get G is equal to 1 minus 2B. Now, of course, people also try to remember Gini coefficient as equal to 1 minus 2B. If you can remember this, then it is very good. Then you can directly put the formula of directly put the value of B and get the answer. But still, if you don't remember, like me, because I do not like to remember these formulas, so you can quickly derive it like this. So then G is equal to 1 minus 2B, and now B we were given as zero point 0.5, so G will be equal to 0, right? So one part of the question is solved, that is the value of the Gini coefficient that is coming out to be 0. So option B and option C are automatically eliminated. Now, when G is 0, so what does it mean? Now also don't remember this. I will suggest you to not remember that what does G is equal to 0 represent and what does G is equal to 1 represent. because you may commit some silly mistake here. Just try to think conceptually. Now here in this formula, if g is equal to 0, what does it mean? This means that a is equal to 0, right? Now if a is equal to 0, this means that the Lorentz curve, so this curve will basically it will coincide with this perfect equality line, because then only the area a will be 0. So therefore, this will be the case of perfect equality. So the answer will be value of the Gini coefficient is 0, and this represents a perfect equality situation. I hope it's clear. Okay, guys, so this is the first question that we have. So here they have given us the value of b, which is zero point 0.5, and then they have asked us to find out the value of Gini coefficient and whether this is a situation of perfect equality or perfect inequality. So here, now looking at this diagram, I hope you guys must be knowing this diagram. So this is just the the horizontal axis represents the cumulative percentage of population, and the vertical axis represents the cumulative percentage of income, and this diagonal represents the condition of perfect equality. And then this curve, this slanted curve, so this is the Lorentz curve, and above it this is the area b, and the below area, so this is called b. Now, I generally do not remember the formula of Gini coefficient, because whenever I try to mug up something, I kind of make a mess of it. So what I try to do is I remember this formula. So this is very easy to remember. That Gini coefficient is a by a plus b. Okay. Now, now here we are given b as zero point 0.5. Now a plus b is also equal to 1 by 2. Why? If you look at the area a plus b, so this basically represents this lower triangle, this triangle. And the area of this triangle is what? Half into base into height. So half into base into height. Base is 1, height is 1. Why these are 1 1? Because if you look at this is 100%, and this is also 100%. What is 100%? 100% is 1. So half into 1, that is equal to half. Now we know a plus b is equal to 1 by 2. Let us put it in this Gini coefficient formula. So then you will get g equal to 2a. Now we are not given a, we are given b. So let us write a is equal to 1 by 2 minus b from this equation. Okay. So while when we put this in this formula of g is equal to 2a, so we'll get g is equal to 1 minus 2b. Now of course people also try to remember Gini coefficient as equal to 1 minus 2b. If you can remember this, then it is very good. Then you can directly put the formula of directly put the value of b and get the answer. But still, if you don't remember, like me, because I do not like to remember these formulas, so you can quickly derive it like this. So then g is equal to 1 minus 2b, and now b we were given as zero point 0.5, so g will be equal to 0, right? So one part of the question is solved, that is the value of the Gini coefficient that is coming out to be 0. So option B and option C are automatically eliminated. Now, when g is 0, so what does it mean? Now also don't remember this. I will suggest you to not remember that what does g is equal to 0 represent and what does g is equal to 1 represent. Because you may commit some silly mistake here. Just try to think conceptually. Now here in this formula, if g is equal to 0, what does it mean? This means that a is equal to 0, right? Now if a is equal to 0, this means that the Lorentz curve, so this curve will basically it will coincide with this perfect equality line, because then only the area a will be 0. So therefore this will be the case of perfect equality. So the answer will be value of the Gini coefficient is 0, and this represents a perfect equality situation. I hope it's clear. Okay, guys, now the second question. So now this question I may not have written it correctly. Guys, please feel free to correct me if I have written any value wrong. So what we were given in this was there were two commodities, x1 and x2, and we were given the demand functions of these two commodities, and then there were some statements, and we had to select the correct option. So if you look at the q1, so demand for q1, so it varies inversely with the price of that commodity, which is very fair. But however, the demand for q1 is directly proportional to the price of x2. So demand of x1 is directly proportional to the price of x2. Now this obviously means that that x1 and x2 must be substitutes, because if the price of other good is increasing and that leads to increase in the demand of your product. So that means that these two goods must be substitutes. But let us look at the demand curve, the demand function of the second good. So if you look at the good x2, so its demand function is this. So again, it is inversely proportional to its own price. However, it is directly proportional to the price of x1. So again, this shows that if you increase the price of good x1, the demand for good x2 increases. So again, this clearly shows that these two goods must be substitutes. So the first option was that x1 and x2 are complementary products. So this is definitely wrong. Second option was x1 and x2 are competitive to each other. So this I found to be correct, because it shows that these are substitutes. And option C and option D, they were a little bit complex, which I'm not able to remember. So guys, if you think any of those options is correct, so like do let me know. According to me, option 2 should be correct. Okay guys, so the third question now. Now here, a perfectly competitive firm was given, and it was written that the initial price is 60, and the cost function was also given of this firm. So this the quadratic cost function was given, and then it was mentioned that if the price changes from 60 to 54, then what will be the change in profit? So this was asked. So I think this is also a fairly simple question. It was just that the calculation was a little bit tedious. So all you had to do is the profit maximizing condition, that is P is equal to MR is equal to MC in case of a perfectly competitive firm. So MC you can easily find from the total cost curve. So MC will be simply the differentiation of TC. So that will be 2Q plus 8, and you had to equate it to 60 first, and then secondly, when the price decreased to 54, so equate it to 54. So Q, as a result, you will get two different Qs. So in the first case, you will get what, I think 26, and in the second case, you will get Q as 23. So then what we had to do, find out the profit in the first case, find out the profit in the second case, and then see if the profit increases or decreases. How you can find profit? Simple. The total revenue minus total cost. What will be total revenue? P1 Q1, and total cost they have already given to us as TC. So use this formula to find out the profit for both the situations, and then see if the profit is increasing or decreasing, and by how much. When I calculated it, so I got this as answer, that the profit decreases by 147. Let me know guys if you had got any other answer for this one. Now the fourth question, guys, again, I would say a very simple question, a straightforward question. So you were given elasticity of demand as zero point 0.5, and then you were given the price as $10, and then you were asked to find out the value of marginal revenue. Now, if you guys know, there is a very simple relationship between marginal revenue, price, and the elasticity of demand. That is, sorry, MR. MR is equal to P into 1 minus 1 upon E. So, I mean, that is a very straightforward relation between marginal revenue, price, and elasticity of demand. So, if you plug in these values, so you will get, what will you get? MR is equal to price is given as 10. So, 1 minus 1 upon zero point 0.5. So, this you will get as, you will get MR as minus 10. And as far as I can remember, the options were, one option was minus 10, one was 0, one was 1. I don't remember the last option, but I think this should be the answer. So the fifth question now. So here, it is given that there is a situation in which there is an extreme fall of demand for loans. Now, what should be done by banks in such a situation? The first option was sell government securities. Now, let us see what will happen if the banks sell government securities. If the banks are selling government securities, what will it mean? It will suck out money from the economy. Now, already, there is an extreme fall in demand for loans. That is, like people are not demanding money, like our objective, looking at the situation, the objective should be to inject money in the system, to somehow increase the demand for loans. So this, the option A, will not in any way increase the demand for loans or increase the money supply in the economy. In fact, it will decrease the money supply. Second option, increase the prime rate. Now again, very suicidal thing. Already there is a fall of demand for loans, so if you increase the interest rate, that will that will further kill the demand for loans. Increase the liquidity. Now, before this, let us come to the last option: change their portfolio. Now, change their portfolio. I mean, this is a very subjective thing. I mean, we don't really know what is the portfolio of the bank, and change the portfolio to what? I mean, a little bit vague option. So we cannot be sure if this is correct. But the C option, increasing the liquidity. So this seemed the most appropriate option, because increasing the liquidity means you are basically increasing the money supply in the economy. And if the money supply is increased, so that will imply that the interest rates will fall in the economy. And if there is fall in interest rates, the demand for loans may increase. So I think this seems to be more appropriate to me. The C option, that is increasing the liquidity. Let me know, guys, what do you think should be correct for this one? Okay, guys, the sixth question now. So it was given that when oligopolistic firms cooperate and they work as a cartel, then output produce is what with respect to perfect competition, and what with respect to monopoly. So now, guys, if you know oligopolistic firms, if they work as a cartel, that is, if they work as one firm, so that means they will work as a monopoly. So in that situation, uh, output produced will be equal to the output produced by a monopoly. But of course, like we know, output produced by monopoly is way less than the output produced by a firm in a perfectly competitive market. So the correct answer would be output produced is less than perfect competition and equal to monopoly. So I think this should be the correct answer for this one. Okay, guys, question 7 now. So now here, demand curve was given as 300 minus b, and the supply curve was given as q by 2. And then it was mentioned that government imposes specific tax in such a way that it maximizes the total tax revenue. Now, under this situation, it was asked us to find out the deadweight loss. What will be the deadweight loss? Two options I remember. One was 7,500, one was 25,000. Other two options I'm not able to remember. Let me know, guys, if you remember what were the options. So this question, many of the students, aspirants, they were confused how to solve. Some were saying that when they have not given the tax rate, so how to solve this? So guys, this was a very easy question. Let us look at it. So let us just plot the demand and the supply curve. So this will be, if you plot the demand curve, so of course this is price, this is quantity, this is the origin. So this will be 300, this will be 300, this is the demand curve. Now the supply curve, it will be simply like this. So the supply curve, that is, this will be q by 2. Now this is the situation that we have. Now let us try to find out this equilibrium point first. So this will be what 300 minus q, so that will be equal to q by 2. So this will be 300 is equal to 3 by 3q by 2. So this will cancel out, and q we will get as 200. So now we know that this quantity, this is 200. Okay. And if you want to find out, you can find out this price as well. So if q is 200, you put it in the demand equation, so you will get price as 100. Now let us assume that the government imposes a tax of t. So just randomly assume the tax rate. So what I'm saying is, let us just assume that government imposes a tax of t. So what will happen? We can draw something like this. So let us say after tax, so this is the demand paid, this is the price paid by the people, this is the price which is received by the suppliers, and the rest is taken by the government. So we can say that pd minus ps, that is equal to t. Can we write this? Of course we can write this. Now, very simple. Now to solve, what you can do is, again, like, you have to equate the quantity demanded equal to quantity supplied. So here, uh, what you can do is, so here, let us once again go back to the question. The question asked that, question mentioned that the government wants to maximize the tax revenue. Now what will be the tax revenue? Tax revenue will be simply t into q. That is, what is q here? Q is simply, if you look at this, So this is the quantity that you will get from here. So this is the, let us say this is q star. So the total tax revenue that will be t into q star, and now t into q star, and now we have to maximize this thing, right? So what will be what this will be? T we already know, T is PD minus PS into Q. We have to maximize this. Now you can further, you know that what is PD? PD is 300 minus P. Uh, sorry, PD is 300 minus Q. So just write this 300 minus Q minus QS. QS is what Q by 2 and into Q. So this is the tax revenue. Tax revenue you can say. So this will be this. So let us write this as R. So R will be 300 Q minus Q square minus Q square by 2. Now, very simple. It was given that government wants to maximize the tax revenue. So let us just differentiate this with respect to Q. So this will be 300 minus 2Q minus Q and equal to 0. So if you solve this, you will get 300 is equal to 3Q, or Q is equal to 100. So what are we getting? We got Q is equal to 100. Now this means that this Q star, so this is equal to 100. Now, the question doesn't end here. They are not asking the quantity at which the tax revenue is maximized. They are asking the deadweight loss. That is, they're asking this area. Calculate this one. Now for this one, we need this PS and PD. So again, what is PD? PD we know that is 300 minus Q. Q we got as 100. So PD will be 200. Okay. And what is PS? PS is Q by 2. Q we have got as 100. So that will be 50. That is 100 by 2. So this PD, this will be 200. This PS, this will be 50. And now to calculate this area, what we can do is half into the distance, this distance. So this will be 200 minus 100. So 100 into this side. So this side will be 200 minus 50, that is 150. So if you do this, this is 50. Now 15 into 5 is 75. So 7500. So I think this should be the answer to this question. Sorry guys, I became little might have become little confusing, and I'm not really good at utilizing this space. So but I hope you got the concept. So I think the answer should be this 7500. Okay, guys. So eighth question now. So this was a similar question to the question 7. So here again we were given demand and supply curves, and then it was written that again the government imposes a specific tax, and it was also mentioned that the tax revenue is maximized. So we were asked to find out at what quantity the tax revenue will be maximized. Now, unfortunately, I do not remember here the demand and the supply functions. What are the functions given? So, guys, if you guys remember what are the demand and supply conditions, supply functions given, so please do let me know. But I do remember that when I solved it, so I was getting this 20 as the answer, because the same thing you have to do. PD minus PS is equal to T, then T into Q, that will be the tax revenue, maximize it, differentiate it with respect to Q. So the Q you will get as what I was getting it as 20. Okay, guys, the ninth question. Now here a multi-plant monopolist was given, and we were given the two demand curves. So uh, QX, that is the demand curve for this commodity X. So this was given as a function of X and Y. So there was a complex function in which there were constant terms, there were terms of X, terms of Y, and the interaction term as well, XY. Similarly, QY was given as a function of X and Y again, and the total cost function was also given. It was a very big function, but again consisting terms like X, Y, X square, Y square, and XY. I do not remember the exact functions, but then it was asked to find out the equilibrium price and quantity in the I think it was just as the price, equilibrium price in the both the markets, and the total profit of the monopolist. So I think, guys, it was also a very simple question, yes, but a little bit lengthy because there were calculations involved. So what you had to do is either you write the total profit function of the monopolist. So that will be what that will be P1 Q1 plus P2 Q2 and minus the total cost function, and then differentiate it with respect to Q1 first, keeping Q2 as constant, and then you will get equation in Q1 and Q2. Then again differentiate it with respect to Q2, keeping Q1 as constant. Then again you will get an equation in Q1 and Q2. So you will get two linear equations in Q1 and Q2, and from these you can easily find out the values of Q1 and Q2. And once you find out the value of Q1 Q2, you can find out the value of price as well. So what I was getting it as, and I remember this option was there, that price of X was 13 and price of Y was 17, and the profit was coming out to be as 500. So there were other options as well. uh, in two options the profit was shown as 500, and other two options C and D, so there the profit was coming out to be 1000. So I think my profit was coming out to be 500, and the prices given in other options I don't remember. But I guess guys, you get an idea like how to solve this one, because I mean it was simple, but yes, a little bit lengthy to solve. Okay, guys, now the 10th question now. So here, two companies were given, and one was producing a floppy, and the other was producing disks. And then these two production functions were given. And then it was also given that the amount of labor and capital used by each of the companies. So that is same. That is, if I write this L1, L2, and K1, K2. So it was mentioned that in words, it was mentioned that L1 is equal to K1 and L2 is equal to K2. Now here, if you apply this, if L1 is equal to K1, so this you can easily write as, so if L1 is equal to K1, what you can write Q1 as? This will be 10 L1 to the power zero point 0.5 and L1 again to the power zero point 0.5, because L1 is equal to K1. So this you can write as 10 L1, because zero point 0.5 plus zero point 0.5, these will add and this will come out as 10 L1. And then again, uh, this was for the second one as well. So second was 10 L to the power zero point 0.6 and K uh, to the power zero point 0.4. Again, don't write this L1, because I think it was only L written there, just L and K, because then uh, we may get confused. So so again, if L is equal to K, then what we can do, Q2 is equal to 10 L to the power zero point 0.6 into L to the power zero point 0.4. So again, it will be 10 L to the power 1. So in both the cases, Q1 was coming as 10L and Q2 was also coming as 10L. So therefore, Q1 must be equal to Q2. So there was this option, Q1 is equal to Q2. Other options were, one is more, one is less. The last option I don't remember. But I think this one should be the correct option.